Evergrande's collapse could be very bad news for Australia and the world. For the first time since the collapse of Lehman Brothers in late 2008, there is a serious risk of global financial contagion. That is, there is a possibility that investors, en masse, will withdraw their cash from major institutions around the world, and those banks in turn will not be able to meet their own funding or lending obligations. It's colloquially known as a credit crunch. If that ensues, much economic activity will grind to a halt and unemployment will spike. You end up in a deep global recession, as happened during the global financial crisis of 2008, after Lehman Brothers collapsed. In the weeks ahead, we could see a development that has the potential to spark such a series of events. What's the event we are worrying about? China is the world's second biggest economy. Its property sector makes up 25% of gross domestic product, Oregon GDP. Evergrande is China's second biggest property developer, the world's most indebted, and it's in severe financial distress. Inside sources have told financial news service Bloomberg that Evergrande already missed interest payments to two of its largest bank lenders on Monday. To the relief of financial markets, Evergrande Group's onshore property unit, Hengda Real Estate, says it will make a 232 million renminbi, $49.5 million, interest payment for its 5.8% 2025 bond on Thursday. The bond covenants also state there's a 30-day grace period before a missed payment on that dollar note would become a default, according to the bond covenants. But there are at least 8 more coupon payments due before the end of the year, one which is more than double the size of Thursday's repayment. Do you see where this is going? Amp Capital's head of investment strategy, Shane Oliver, says there's a serious risk of financial contagion. It could set off a contagion through the Chinese credit system, making it harder for other property developers and other borrowers to get funds, he warns. But it could also set off forced sales of properties, having the effect of pushing down, or crashing, the Chinese property market. The implication for Australia. A Chinese property market crash would cripple China's economy.